Good evening. Welcome to yet another edition of The Big Picture. I am Sana Khan. The last few months witnessed a flurry of bad news on the economy front. GDP growth slipped to around 5%, the worst levels in a decade. Inflation was taking to a high single-digit level, and the huge current account deficit was raising concerns over the sustainability of India's growth story. Suddenly, there seems to be plenty of good news. The wholesale price inflation has fallen to a 40-month low of 5.96% in the month of March. Even the most optimistic among analysts wouldn't have expected for the WPI inflation to have fallen below 6%. In fact, food inflation also has declined to 8.73% in March from 11.38% in February. Besides, prices of vegetables fell 0.95% in the month of March as well. Another piece of good news was a crash in global crude prices. Brent crude has plunged below $100 level. Prices of gold are also on a tailspin, and these items were the largest contributors of India's 6.7 current account deficit. But now it seems things could look a little different from expected. Now, how do you explain these numbers? Do these positive numbers result in a turnaround in the economy? What should the government, the central bank and corporates do in this new developing scenario? To discuss all of this, we have a panel of experts with us. I welcome Ms. Renu Kohli, former staff member of RBI and International Monetary Fund. She's with me on OB from New Delhi. Also, Mr. V Kanoria, former president FICCI. With me in the studio on my extreme left, Professor N R Bhanumurthy, professor at NIPFP, and Soma Bannerjee, she's the national policy editor with the Economic Times. Thank you all for joining me on the show today. In fact, let's just start by discussing the numbers. And if I can ask Professor N R Bhanumurthy, when we talk about the WPI inflation, we talk about numbers. It's at a 40-month low. Gold prices have come down. They're at 26,500. Crude oil prices have come down. What do these numbers really mean?
Well, all these numbers are really positive for economy like ours, particularly where we are actually struggling with a very, very high current account deficit of 6.7%. Although our numbers for the fourth quarter might be a little more positive compared to the third quarter, but all this indicates that we are actually looking forward for some kind of positive sentiments building up in the business community in this country.
Right. Soma, what do you have to say about these numbers? Do you think that these numbers are actually can bring a turnaround in the economy, or what do you have to say?
Well, I don't think they can really turn around the economy, but they definitely are very important given the kind of situation we are in. We're in a very tight spot, and I think the government showed enough courage by taking some very strict reform measures. Also, I think it's going to be politically helpful because, see, with crude oil prices coming down, it gives scope for petrol, diesel prices to come down, which have been a huge political hot potato for this government. Also, it helps in bringing down inflation, again, which is very important. And we need to remember that all this seems to be happening just before the elections are due in the states. So I think Mr. Chidambaram, who showed guts, and the government, which showed that they could walk the talk by taking some tough reform measures, should now be able to at least temporarily, I'm saying temporarily because we do not know how it's going to really pan out, take the benefits of these reform measures.
Let me bring in Mr. V Kanoria at this point in time. Sir, what do you feel? The industry has been disappointed for quite some time now, asking the central bank, the government to take some measures. What sort of reaction will this particular prices, the crash in prices, will be garnering from the industry? Is it a big positive news?
No, I think we needed some luck after a lot of bad luck that we've been having in the country. And so this news is definitely welcome. Let's look at the petroleum prices. I think it has an impact both from the point of view of the current account deficit as well as from the point of view of the fiscal deficit, because it's likely to reduce the subsidy burden of the government.
Right.
So the decline in petroleum prices, which had gone up much above $100, is certainly welcome. Then we look at the next year of gold. The prices.
All right, there seems to be some problem with the audio over there from Mr. Kanoria. I'll try and go back to him in just a bit. In the meantime, let me go to Ms. Renu Kohli, ma'am. We will go deeper into the discussion, but your initial reaction. Now, no one could have foreseen this sharp decline in WPI inflation. What do you have to say?
Well, it's a positive, and the question of, however, is to what extent is it sustainable? Till last week, one would have thought that perhaps these will resurge, inflation will resurge as demand resurfaces. But now, given the situation in the world markets and the repricing of oil and commodity prices, they're tumbling very rapidly along with gold. And the view is that China is slowing down, and the trigger's been Chinese GDP data. So it does appear that for the rest of the year, they will probably remain very subdued. At least that's what the forecast by all international agencies say.
Yeah.
So, that takes us over a medium-term positive. And domestically too, it's a good time where oil price subsidies are being passed through, correction is taking place. So overall, I would say both inflation, all three, inflation, current account deficit and fiscal deficit indicators, all three, the fundamentals, the key fundamentals which have led to a derating of the Indian economy are on the improvement path.
Right, absolutely. So, just go ahead.
Although I'm pretty intrigued, I mean, commodity prices, there is a reason. I would like to know, and maybe our fellow panelists can enlighten us on the supply side as far as vegetables and fruits are concerned. The one good indicator which are coming right now from private Met agencies is that we're likely to have a normal monsoon. If that happens, then I can understand. But what do you think? I mean, to me, that's a point to wonder. While I can understand on oil and gold, but as far as vegetable prices or fruit prices are concerned, what really has changed the picture? I mean,
Well, should I?
Yes,
Well, if you
ahead.
see, you're right actually. If you see the disaggregated data on WPI, it is only the core inflation which is actually coming down sharply. But on the primary article side, still we are in a very elevated levels, much more uncomfortable level than what we expect. But certainly if you see the trend, even there is some kind of a downward movement.
yeah, but what has changed, do you think?
Well, there could be really one has to really look at all this, at a commodity level. But generally, if you see the overall going forward, if you see some of the futures markets, in the futures market, the price of not just commodities like metals, but also on the food prices, so they're slightly slowing down. There may be some kind of demand reduction happening in the world market, not just in the Indian markets.
So with these numbers, the fact remains that also coming back to the growth, decelerating growth, Soma, remains a main concern for the government also at this point in time. So I'd like to ask you, when we look at these numbers, how much of help will it be in reversing this trend, perhaps, so to say?
See, the first thing I think which everybody is going to talk about when it comes to growth is interest rates. So because of inflation rates coming down, and because there's a cooling in the commodity prices, which means it will impact our trade deficit as well as our current account deficit, the two, as well as fiscal deficit, as was rightly pointed out. These are factors which the RBI has been warning about when it's talking about rate cuts. So the first expectations are that, May 3rd, monetary policy coming up, we see an easing of rates. Now that means, easing of rates means demand goes up, and industry will definitely want to see some softening of rates, because remember, investments have come down dramatically.
Right.
So yes, a lower interest rate regime at a time when, when everything seems to be going against, could be the push to industry to really pick up their investments, and that could revive growth, I think.
Absolutely. That's also one of the key challenges in front of the government as it goes ahead into the election. We will be talking about these numbers, what they mean for the Indian economy. Are these numbers that we're seeing, the falling prices, here to stay? Are they sustainable? Come back after a short break. Welcome back. You're watching The Big Picture. Now let's talk about these numbers, these falling numbers. The consumer price index, still with the WPI inflation falling sharply, is still high and is expected to remain in the band of 9 to 10%. In this, looking at this, do you think further easing of the monetary policy, cutting down of interest rates, is going to happen May 3rd? The industry, has come out and said that they are expecting a cut as sharp as 1%. Let me go to Mr. Kanoria first with that. Mr. Kanoria, if you could answer that.
No, I think we've been talking about the interest rate reduction, and these numbers are encouraging. I think a little bit of luck, as I said, is flowing towards India and the government. So there's a good opportunity to actually take this step of cutting back on interest rates, because we are more concerned about the wholesale price index rather than the consumer price index, because the consumer price index also has a built-in inefficiency in our delivery mechanisms, which needs to be tackled differently and not purely through the interest rate mechanism or by tightening the monetary policy.
Right.
So as far as industry is concerned, we would definitely look forward to an interest rate cut.
All right, let me go across to Ms. Renu Kohli. Now, RBI, ma'am, in the past has said it very clearly that the widening CAD, the current account deficit, is what it's putting pressure on it from cutting these rates. Now, do you believe with these new numbers that have come in, that pressure would ease to a certain extent and the government will, and the RBI, I beg your pardon, will be able to take those steps that it wasn't able to take earlier?
I should imagine that the current account deficit is set to improve in the January-March quarter, for which the trade deficit numbers are already out. Definitely there is a shrinkage, but you could typically, that's a seasonal trend. The trade gap narrows in January to March, but for the next quarter to April to June, just mainly from the gold demand coming off and oil and commodity prices, I think that improvement will continue. So that would have a bearing, I should imagine, upon the Reserve Bank's view regarding interest rate cuts. Definitely it's a positive for in that sense.
Soma, would you like to add to that?
Well, you know, I'm a little, I'm not quite sure on the gold demand. I mean, of course, there's no two ways that the current account deficit should come down because oil prices will come down and that would give them the elbow room which is needed. Yeah. Now, at the time when the gold demand was surging, I remember there were questions as to why is the gold picking up so much? Why are people still investing in gold? One reason for traders and big time people was hedging. Now, at that point also this was the case. Is there an alternative to gold as an investment destination? Now that would depend on things like the equity market moving up, etc., which again is dependent on the growth mood and the sentiment and investment mood. So really, I mean, gold demand will come down as far as the big house traders are concerned. But I'm a little intrigued because a lot of retail investors have got gold in their portfolio today. And if they have gold in their portfolio today, lower prices means getting more gold for the same price. So would I like to withdraw from my gold portfolio? But again, that may be a very small portion. So the point is, how much gold demand will really go down is something I'd like to watch myself. But as far as current account deficit and oil prices coming down, that should be a big relief, which the RBI has been mentioning. The finance minister and the prime minister have said that.
Ms. Renu Kohli wants to, I think, give a reaction to that. Go ahead, ma'am.
Yeah, I would just like to respond to the assessment of gold demand. There are two components to it. One is the speculative demand and the second is the household demand. I would agree that the traditional demand by householders would remain and perhaps, slightly go up. But as far as the investment point of view is concerned, there are two developments. One is that the future price uncertainty with the belief, investors' beliefs that the gold cycle is ending at last has increased a lot of uncertainty, and futures in the gold 400 tons reportedly has already been locked up in gold futures, has already till June has already been put up for sale. There are heavy outflows from exchange traded funds as far as gold is concerned. So the very fact that the uncertainty has increased downside risks to holding gold would suggest that the speculative demand is largely off. Second, also inflation coming off also increases the real returns on alternative assets. So I think one can definitely be sure that at least for the current quarter, that is April to June, the current account deficit will not reflect, in October, December, $32.6 billion of current account deficit was composed of $6.4 billion of just gold imports. So I would think that definitely we are seeing a correction there.
Right. Now, let's also talk about, and let me get here Professor N R Bhanumurthy at this point in time. Do you think then this rally is sustainable? We saw the Sensex today surging above 300 mark, 300 points high. Do you think that this would in any way change perhaps in the months to come? This is the talking point we should be talking about, change in India's macroeconomic situation from right now.
I would like to look at these inflation numbers a little more carefully. I mean, the kind of number that you've seen I'm not really sure it's going to be the medium-term trend. It may be one-off to some extent, but the inflation expectations are not really, sure about declining trend in the future. The reason for yesterday's crash in the gold market is because the inflation expectations in the US markets are coming down.
Right.
So there are some, the inflation hedge that we used to think about the gold is shifting from gold to other financial assets. In India, it all depends on what the inflation expectations are going to be. My guess is that we may be really reading too much on this number, that less than 6%. We may be settling at 6.2% for the medium term. So even then, if the trend in core inflation continues, there would be some kind of a headroom for the central bank to react through interest rates.
Right.
But if you, last round also there was a reduction in the interest rates, but it's not really been transmitted to the investments. It's not been translated to the lending rates. So there are other issues like the bank balance sheets. I think we need to really look at these bank balance sheets before we really start reducing the interest rates.
At this point, I'd like for Mr. Kanoria to react on this, even if we are looking at these rate cuts, but there is still some time before, we can see the final effect of these rate cuts. You're saying the industry now expects the RBI to cut interest rates on the 3rd of May. Tell me, what do you what more are you expecting from the RBI at this point in time? Is a 25 basis point rate cut good enough?
No, 25 basis point was done in the last monetary policy of the RBI. And I think that it has to be attacked in two ways. One is the rate cut and also to improve the liquidity.
All right, we seem to have lost Mr. Kanoria's audio again. My director is trying his best to get his audio back. In the meanwhile, Soma, would you like to continue where we...
Yeah, I don't know, Mr. Kanoria would have explained this better, but I agree with Professor here that the rate cut firstly has to translate into real, the RBI cuts rate, which has to translate into real rate cuts by the banks. Two is, one area is, and Mr. Kanoria just mentioned liquidity, so the bank's position is very important here. Liquidity of industry is also very important. And I think, the fact that demand contraction is taking place, that is a big if, particularly in sectors like FMCG or in any other things which is actually demand led.
Right.
You need basically public sector companies, I think, or big projects to really take off. So the government will need not only the help of the monetary policy, but it will need to push its at least the government companies to go in for the big investments, things like road building, infrastructure, real estate, social sector. These
we will be talking about more of that in the next.
Just to add to that, when there is a decline in the interest rates, the banks are actually increasing the deposit rates.
That's right.
So there is some problem in the bank balance sheets, which we really need to look at before we talk about
Mr. Kanoria is back with us. Please go ahead. Your audio just went off in between. Yeah.
Okay, so as I was talking about improving liquidity simultaneously with a rate cut.
Yeah.
So both the CRR as well as reduction in interest rates need to be handled in tandem. The second point is that we cannot wish away the other reforms. Therefore, the ground realities of land acquisition, environment clearances, availability of money, I think these all will have to be addressed simultaneously if we want to bring investment back. So we should not become complacent about a situation which is largely caused as a result of global easing. And gold, many people have talked about the reduction in price of gold, but nobody has said the reason for it is really the European crisis and Cyprus having to sell its gold
reserve,
which has triggered uncertainty about other countries also having to do that to correct their own fiscal situation.
All right.
So I feel that the gold is not going to be such a attractive investment for other than household investors. The speculative investment point which was made, I quite agree with it, that we will likely see a reduction in gold imports in the country.
All right. Hold on to that thought. We will continue discussing this. Soma, I know you want to make a point. We'll be back after this short break to discuss what the industry, what the central bank and what the government should do now the way ahead. Stay with us. We'll be back. Welcome back. You're watching The Big Picture. In this segment, we're going to try and look ahead with these rate cuts that we're seeing. What is the way ahead? What can the three bodies, the government, the central bank and the industry do and hope for from here on? Let me start by asking Professor N R Bhanumurthy and Ms. Renu Kohli that what should the policy makers and the industry do now in this sort of scenario? Should the government really speed up reforms to facilitate this turnaround that we're seeing? Otherwise, we won't be able to take this opportunity, so to speak. Professor Bhanumurthy.
All along, I have been of the view that the kind of slowdown that we have seen in investments or the growth is largely because of the lack of confidence. The confidence channel was one of the biggest channel that was affecting investments. And now, since September, we have seen a number of measures, and we have seen that Finance Minister, crisscrossing the continents and trying to invite investors.
In fact, he's also scheduled for this recent.
He is in Canada.
Canada.
So all these things are actually, and added to that, the global developments in the recent period is actually giving a kind of optimism in overall investment sentiment. Should be giving positive sentiments in the overall economic activity in the country. RBI, what it should do, as I said, it needs to really track inflation expectations. If the inflation, by their own assessment, if it's coming to 6.5%, they should go ahead in continuing the downward cycle in the interest rates. At the same time, as Mr. Kanoria said, structural issues has to be addressed by the government. So there is no other way. It has to be a multi-pronged approach to really revive the overall investment sentiment in the system, not just interest rates. I think we are talking more on interest rates, and I have been saying that the peak investments happened when the interest rates were at peak. So the peak growth also happened when the interest rates are at the highest in the 2007-8 situation. It's not just interest rates. I think there are many other issues that needs to be addressed.
Ms. Kohli, do you agree a multi-pronged approach is what we need at this point in time if we have to channel these figures that we are talking about today?
I would put it somewhat differently. See, the improvement in both the current account deficit and inflation is mainly coming from overseas developments. That is falling oil and commodity prices, but domestically that is combining with the low demand. So the pricing is thing. So it is very helpful going ahead. But at the same time, the what is happening is that globally there is a very rapid pace of repricing of assets, and that is serving to increase uncertainty, notably that of prices. And for Indian businessmen or rather exporters, the biggest price that they face is that of the relative price, which is the price of your goods, the exchange rate. So I think that the government can do a rethink there. I would say that a stable rupee, which is in line with its fundamentals, would be very, very good for exports. Let us not forget that despite the massive depreciation since September, October 2011, exports haven't revived. Such is the extent of erosion in competitiveness of Indian exports. So I think they really need to attend to that. And that could deliver some stimulus, particularly as one of the causes which is driving the fall of gold prices is the belief gaining strength that the US economy has reached a turning point and it is set to improve. Gold was, the fact that gold prices were rising was exclusively linked to QE and money debasement of the dollar. But if the money is shifting towards dollar and the dollar is appreciating, then the gold cycle could perhaps be ending for some time. So if the US recovery is set to improve, I think the important thing is to look at exchange rate and exports.
All right. Soma, I'd like to take your views on this. The current account deficit, the fact remains that there is a need for foreign direct investment. Perhaps the government, these numbers are a blessing in disguise for the government, but the government has also in the past taken strong steps made itself clear what it wants to do and where it's heading in terms of what growth rate it wants, what numbers it wants. Do you think that we are going on a right path?
Yeah, but we are on the right path. Maybe the government needs to do much more to really assure investors that we have the right environment for investments to come in. Regulatory issues which have been dogging investments need to be really cleared out. Some of it is coming. You can see in the power segment, for instance, the regulators view that, you know, because coal prices have increased, tariffs need to be reviewed, comes as a big boost. You need some clear clarity on the coal issue. You need clarity on environmental clearance, which is kind of taking off with the CCI. So the government's push for seeing that there is a good investment climate will be very important. And I think, Mr. Chidambaram, you are in safe hands with him there and Dr. Subba Rao as the RBI governor. But I think, you know, one thing which I think ma'am mentioned, and I would agree, that we can't forget the global scenario, and India is a part of the global scenario. So basically, if these prices have come down, they're because of contraction, whether it's China or otherwise, and that should not be very good news for our exporters, right? And most importantly, like again ma'am mentioned, the rupee is very important over here. We may lose out some of the upsides of all this if the rupee continues to fall. So we need to see that the rupee strengthens. We need to see that our exports pick up, and therefore beyond the monetary policy, I think one should look at the export-import policy, which is due also, where we expect.
All right, all right. We're running out of time, absolutely, but thank you, all of you, for making your points very clear over here. So the question was, the Indian economy, is a turnaround in sight? Perhaps yes, we are somewhat on the right path. A lot of factors really affecting what happens in the Indian economy as well that cannot be ruled out. Thank you so much once again for joining me on The Big Picture. We'll be back again with another debate issue. Thanks so much for watching.